afternoon, everybody. Welcome to the Moving Markets Podcast. It is Wednesday, September the 17th, 2025. Stock market has been closed for about an hour and a half at the time that I'm recording this today. Markets were mixed today, and I will admit when I am dead flat wrong on something. I made a prediction shortly after Jerome Powell started to speak following the Fed announcement that there would be a quarter of a point rate cut. I predicted that before the close of the day, the Dow Jones Industrial Average would be down 300 plus points. At the time I made that prediction, it had gone negative after being up at one point in time. I think it was up, was it 400 or 500 points today? I used some crazy amount to the upside this morning. It had a spike up right after the announcement of the cuts was made, because with the announcement of the cuts, it was stated that they would probably see 2 additional cuts. And you can see the timeline right here. Dow Jones started the day moving immediately to the upside, stayed pretty steady. And here was the announcement of the rate cut. Spiked way up on the news of the rate cut, dropped a little bit, jumped back up, then went way down. And it was somewhere down in this neighborhood, somewhere right in there. I don't know if it was at the lowest point on this chart, but it was somewhere down in there. I thought this slide would just continue. I thought this was going to continue down and we were going to finish. And I was surprised. And again, I'm admitting full blown that I was wrong. Recovered and then stayed a little choppy but flat after the recovery, right back to where it was pre-rate cut. I mean, look at that before the rate cut announcement. Look at how online that was with where it finished today, up about 260 points. I was off by a good 560 points because I thought at this point in time, like I said, right about here, I thought we would finish the day maybe down 300 points. Now, the NASDAQ and the S&P, different story. They both spent some time today in the green. The NASDAQ actually, I think. Actually, I take that back. The NASDAQ did not go green at all today, I think. Let me get a daily chart. Maybe right at the open, they might have been up a little bit. They might have briefly touched into positive territory right there. But a different story, a jump up on the news, but then they slid farther and faster, came back up, but still managed to be down about 1/3% overall. I think when they were trading down here, they at one point in time got down almost 200 points on the NASDAQ before a good solid recovery. And what turned out to not be a horrible day, 1/3% down, not an absolutely horrible day. And then the S&P was probably finished awfully flat, 0.1% up to the upside. But on the S&P 1-day chart, you can see almost exactly like the Dow. Finished the day almost exactly where it was. Those aren't good horizontal lines, but finished the day almost exactly where it was pre-announcement. Then they got that same little spike with the announcement, same little sort of double dipper there, same move down, little choppier once they recovered. And in that last hour of trading, ended up finishing the day pretty close to where they spent the majority of the day. So it got kind of wild and crazy right in that first hour to hour and a half after the rate cut announcement, and then flattened. Now, what I'm about to say might contradict a little bit what I've been saying leading up to this week. I made two predictions going into this announcement, not counting the one that I made when I said I thought the Dow might finish down 300 points. I said that if we got a surprise 50 basis point cut, you would see the markets take off to the upside. If we got the 25 basis point cut, we would see a slide unless there was something really definitive about more cuts coming this year. Now, we got the latter of those two things. We got the 25 basis point cut with something pretty definitive about probably 2 more cuts this year. Based on what I said earlier in the week, that would suggest that for the remainder of this week and maybe for the remainder of September, that we have an ever so slightly bullish run. But then Jerome Powell, as he is so good at doing, as he is just one of the very best ever to hold his position at finding a way to throw a wet blanket on something and absolutely ruin something that could be good. He made a comment about something to the effect of probably only one rate cut in 2026. Now, let me tell you, and that might be a little bit of my interpretation of it, but I think that's kind of what he said. Well, there it is. Okay, there it is in the headline. I'm not just. This isn't me. Just my take on it. Fed forecasts only one rate cut in 2026. Okay, this is one of the biggest issues I have with Jerome Powell. He is an absolute idiot for making a comment like that. Number one, if he is such a data dependent person, which he has said so many times in his tenure as Fed chair, that the Fed is data dependent, how can you predict for all of 2026 right now today? How can you predict for all of 2026 that you're going to have one rate cut? That is moronic. That is absolutely flies in the face of your constant narrative about we're data dependent. You have no clue, absolutely no clue, especially coming from a man that has been so wrong so many times. Powell has just been, just the two most obvious ones. Inflation is transitory and the tariffs are going to cause more inflation. Okay, there's two easy examples to point to where he was so wrong and so completely missed the boat on things. And then to have the audacity to claim to be this data dependent body or this data dependent individual, and somehow you have a magic crystal ball, a magical mirror, and a way of foreseeing that the data will all suggest through 2026 that you're only going to do one rate cut. What an asinine statement. What a moronic statement. And it's almost impossible for me to not think that he's playing politics again, as is his nature. His hatred of Donald Trump is such that I just think he couldn't stand, whether it's overtly or subconsciously. I just believe he could not stand to deliver news today that might be positive longer term for the market. So we got the 25 basis point rate cut. I think that was completely baked into what was expected. We got the announcement that I suggested would probably make things be a little more bullish than bearish going into the next, say, 3 to 6 weeks of trading, in that 2 more cuts coming this year. And then this complete joke moron of a Fed chair, this absolute partisan hack idiot, decided that he would magically forecast that a data dependent Fed somehow has the foreknowledge of being able to say that the data, this is not exactly the words he used, but the data will only support one rate cut for next year. What a pathetic. I more and more, there have been many times where I have not liked when Donald Trump has said inflammatory things and incendiary things about political appointees, about people in positions like this, where he says disparaging remarks about him, or says he should be fired, he's incompetent. But I'm starting to side with Trump on this, that this guy is a partisan, horrible, what's the right word? He is so wrong for this position right now, because he's a liar. He's just a flat out liar. He is inconsistent on what he says and what he does, and I can't imagine more than a handful of people in this country that would be a worse Fed chair right now than Jerome Powell. He's got to go. I really, truly think he's got to go. I'm just kind of in shock. Now, what does all that mean for our trading? I believe, because of the strong implication that we would get 2 more cuts this year, and then the offset of only one rate cut in 2026. I think what's probably going to happen for the remainder of September and maybe about halfway through October, so I'm going to predict approximately 4 weeks, I think you are going to see something in the neighborhood of a 3 to 5% pullback, but a very shaky one. If this was today and we were looking forward, going right here, I would say the move down will be very choppy, and at the end of 4 weeks, only be about maybe a 3 to 5% move down. That's my prediction, but I think it'll happen in a very choppy way, meaning you'll have some days where the Dow Jones Industrial Average is going to sell off 500 to 800 points, where the NASDAQ's going to lose 300 points plus in a day. And then I think you'll see a couple of days where it gets 75, 80% of that back. And then I think you'll see something happen, some piece of information that'll spook people, and another big sell-off. When we start to get into the early to middle part of earnings season, starting right around that beginning of that third week of October, I think earnings are going to start pulling us back up, and I think we will have a bullish fourth quarter. So my prediction is very choppy with a slight bearish slant over the next 3 to 4 to maybe we get into almost 5 weeks. But then I think as we get about 1 week deep into earnings, starting with JP Morgan, Citi, Wells Fargo, Goldman Sachs, when you start to get those big banks that sort of open the earnings season, and then usually it's about a week after that you start getting they come in a 2 week wave, where 1 week you tend to get Microsoft, Google, Netflix, and then usually about a week after that you get Apple, you get AMD, you get I'm probably forgetting somebody, Meta. They seem to come in two groups. A bunch of the big, several of the big tech companies 1 week, and the rest of them the next week. As we get that week of the bank earnings to start earnings season, and then the first wave of the tech companies, I think overall earnings are going to be such that will, really, really shaky and slightly to the downside for 3, 4, maybe 4.5 weeks. And then I think you start to see some pretty strong bullish movement to the upside. Now, a couple things that could affect that and change it: a positive or negative outcome if the Supreme Court moves quickly on a decision on whether Trump has the ability to impose tariffs the way he's been doing. There are some other things working their way through the court. The Lisa Cook thing. I personally think she needs to go. I think it would be a good thing if there is some consensus on the Supreme Court to say that you can't have 100% ambiguity and 1,000 different ways to interpret what cause is when you need cause to fire someone. I think cause could be the appearance of wrongdoing to the point where an indictment is going to be likely. That doesn't mean the person doesn't get their day in court. That doesn't mean they don't get to be proven innocent or guilty. But it also, you can't be guaranteed to keep a position of power when there's obvious evidence of impropriety, even if you're not found guilty of a crime. Lisa Cook has never denied falsifying mortgage applications, falsifying loan applications. She made a sort of a quasi-semi attempt to suggest it was a paperwork error, but she has never come out publicly and denied that she applied for multiple mortgages, claiming that all were primary residents. That is mortgage fraud. There is credible evidence that she did it. That doesn't automatically mean she'll be convicted of criminality in it. But I think the Supreme Court has got a tough thing to determine, what is cause, and can the president of the United States decide that that's cause? So, you got that case, you've got the tariff thing, you've got, it's got to be talked about sooner than later, a possible government shutdown. One that, in my opinion, Chuck Schumer and the Democrat senators would be solely responsible for. But them and the media will do their best, depending on Republicans. But it will be a Schumer shutdown if it happens, and how that gets perceived and how that gets interpreted by the market. So this prediction that I'm making is to a lot of possible variances based on some of these other things that could happen. Whether or not there's some resolution to what happens in Ukraine, whether or not there's some resolution to what's happening in Gaza. These could also be catalysts for a change in what is a pretty mainstream prediction. Bearish for a little while, then a strong bullish for a quarter. I'm not the only one predicting that. That's an easy prediction. That doesn't make me any kind of a genius if that comes about. But you've got to know that there are things going on at home politically and geopolitically that could affect the markets in a big way, depending on how those outcomes are reached. At the very least, short-term effects to it. So that's where we're at. We got to watch really, really close to that diamond trade that we put on earlier this week. I'm good with the Amazon trade. Amazon had a really big gain yesterday and then gave back a fair amount of that today, but it hasn't changed its overall pattern. Amazon, little leg up, little leg down, little leg up, little leg down, but overall, kind of this steady, longer term, sort of this steady upward move. I think it might flatten a little bit before it goes bullish again, but I don't think Amazon's going to get pulled way down the way some other companies could if I'm right on this bearish move that I think we'll get over the next 2 to 4 weeks. So nothing to do with the Amazon trade. For the triple play, the DIA trade that we put on looked really good for a while today for the announcement and when things were trending up. But over the next 2 days, we've either got to see a big sell-off on the Dow, which I think very possibly could happen, or a little bit more upward movement, or we're going to bail out of the trade really, really fast or adjust it into a very tight, narrow condor or iron condor, not a long condor. So be watching if you can on Discord tomorrow and Friday morning to see what we want to do about that. All right. No other adjustments or anything else to talk about. I'm going to wrap up right there. Hope you had a good Wednesday. I'll be watching Discord and be watching the open of the market the next couple of mornings. A good rest of your day, a good day tomorrow. Thanks, everyone. Bye-bye.